Start investing in gold and silver at sdbullion.com today and join over 35,000 precious metals investors who have made the switch to the lowest gold and silver prices in the industry. SD Bullion recently claimed a spot on the prestigious Inc. 500, making them one of the fastest growing bullion companies in the United States. With low bullion prices and over-the-top customer service, SD Bullion is setting the standard for precious metals transactions. Visit www.sdbullion.com today. Start saving on every precious metals purchase you make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and with us today is Alasdair MacLeod from GoldMoney.com. Alasdair, thank you so much for joining us today.
That's my pleasure, Elijah.
All right, well, I'd like to start off with a gold and silver market update. Now, you were recently writing about how since the beginning of the year, gold and silver have really been some of the best performing assets. Gold is up, you said, over 5%, and silver is up nearly 10%. Can you discuss and give us an update on the gold and silver markets since the beginning of the year?
Yes, I'd very much like to. Gold and silver bottomed in the middle of December last year, which was almost exactly an anniversary of their bottoming down. When was it? It was December 2015. So we've had a sort of, anniversaries are actually quite a strong thing. When things move on anniversaries, it can have some significance. Whether it will be significant or not, of course, only time will tell. But the thing that was interesting is that gold actually was quite a bit higher than the current level when Trump was elected. And it was only when the market decided that Trump's election was going to lead to higher interest rates and a stronger dollar that the bullion banks had the opportunity to hit the price and cover some of their shorts. But what is interesting is they didn't manage to cover all their shorts in that operation. There was still, I think, around about 50,000 contracts adrift. And since then, the price of gold has just risen and risen and risen. What usually marks the bottom of the gold price in these circumstances is all the amateurs turn bearish. Every technical analyst was reporting that they saw gold going on down. You had people like Harry Dent saying, I expect it to go to 650 to 750, well below the current level. Admittedly, he was saying that other markets, he reckoned, would go a lot lower. So overall, the sentiment was absolutely right for a decent bear squeeze to develop. We are now in that bear squeeze, but I have to say that the undertone feels to me to be really very, very encouraging. And in any event, I see inflation being the emerging story for 2017. And if I'm right in that assessment, then I would expect gold to continue to go better over the rest of the year.
Now, I'd like to get into a little bit of why you think inflation is going to be really the story in 2017. But first, I'd like to still focus a little bit on the precious metal markets. In your recent article, you were saying that the bullion banks are in a really difficult situation right now. Can you discuss this?
Yes, they're in a difficult position because they are still short of the market and the market is running against them. Normally what they do is they ride the situation, they allow their short positions to increase, and then they take the opportunity to hit the market later when there is a lull in the good news as far as gold is concerned, or the bad news as far as everything else is concerned. That bad news could well occur again as far as gold is concerned. But I think the problem they face is that not only is the price rising against them, but the inflation outlook is definitely deteriorating. And if you look at what happened in 2016, you saw commodity prices rising as China more or less cornered the market in industrial materials. China, remember, has really got Africa tied up, the Asian continent pretty well tied up. She has done deals with countries like Australia, and consequently, she is really almost in a monopoly buying situation. And now we have Donald Trump promising to either invest in infrastructure spending or alternatively get the private sector to develop infrastructure spending. And this is going to create yet more competition for scarce resources. And meanwhile, the mining industry has really sort of, if you like, over the last 4 or 5 years, it's been cutting back on its future investment. So the capacity to supply these products is quite limited. So prices are rising, if you like, in international commodities. Now, on top of that, if you look at what happened in 2016, the money supply, the excess of M2 over M1 has actually been growing above trend. Now, what this means is that I know there's a lot of noise about how the US economy is, not taking off, or is it taking off? Are the figures all fudged or what? There's all that story in the background. But the money supply is telling me one thing, and that is that the banks are now lending again, and they have been lending for at least a year. And this is confirmed when you look at the Fed's balance sheet, because the excess reserves are being drawn down. So, in other words, Mr. Trump comes in as president with a promise to spend on infrastructure, to cut taxes, in other words, fiscal reflation, on top of an economy that has already been motoring along quite nicely. Now, this to me is very inflationary. It's likely to bring about significant bottlenecks, if you like, in terms of supply, particularly since supply chains have contracted. We're now doing just in time for virtually everything. So one way and another, it looks to me like inflation is the big story for 2017. Now, if you're a bullion bank and you got yourself caught short, you have to question, can I play my normal game of increasing my short position, letting the hedge funds go long, the speculators go long, and then hit them at the right moment and get it all back at a profit? I don't know. I think it's going to be very difficult for them to repeat that trick.
Now, speaking of Trump, you've recently written about Trump's trade policies and how really you believe that Trump has got the situation all wrong. He says that the trade imbalances are caused by unfair competition from foreigners, but you say actually no, the trade imbalances are caused because the world is using, various fiat currencies and are manipulating the different fiat currencies to their advantage, and that's really the reason for trade imbalances. Can you explain about this?
Yes, certainly. The way to look at this is imagine a world where you have gold as money. In other words, we have sound money. If you, as an individual, decide that you're going to go and buy something which has to be imported from abroad, either you have to sell something abroad to compensate for your purchase, or alternatively, someone else has to do it. So in other words, trade will always balance so long as you have sound money. Now, that is a very important point to understand, because you can then begin to appreciate that if you have unsound money, then trade deficits and surpluses can be financed. Now, this is the very important point. Given that trade deficits can be financed with unsound money, the idea that the trade deficit arises because of unfair competition, say from China, is completely wrong. And this is the mistake that every economist makes. They seem to think that by, if you like, taking on the appropriate foreign exchange policy, they can actually deal with a trade imbalance. No, that's not true. The only way you can deal with a trade imbalance is return to sound money. This is such a fundamental, important point that nobody really understands it in these days of fiat currency. But if you grasp that point, that you can only import things which you pay for under a sound money regime, then you begin to understand that the trade imbalances arise because bank credit can be created. The government might increase its run a budget deficit and allowing, if you like, people who receive that money, which is created out of thin air, to spend it on foreign imports. When you understand that, then you put the whole of the trade imbalance situation into the right context. Now, of course, this doesn't preclude the possibility that under a sound money regime, let us say a gold regime, that you get changing preferences between holding gold and buying goods and services. And now, under those circumstances, it corrects very, very quickly, because you will find that the prices adjust and the gold flow, if it's going out, stops, and then a new balance is struck. But the point is, you do not get these trade imbalances, which now plague us. The problem that I think Donald Trump has is that he's bought into the story that the origin of trade imbalances is actually currency manipulation, manipulation, if you like, of subsidizing production, all this sort of stuff. It is not true. It is as a result of having unsound money. And that is the thing that he needs to actually understand and attack.
Now, do you see him actually understanding and attacking that? And if not, how do you see Trump's trade policies affecting the United States economy?
Unfortunately, very few people understand the point I've just tried to put across. I don't see Trump understanding it either. He regards himself as a businessman, which of course he is. He's a businessman. I mean, I would say actually he's a very effective politician, but he is a businessman at base, and he looks at these things very, very simplistically. So I don't think he's going to turn around and suddenly understand the point I've just been making. Now, this is a problem because if he goes head on against countries like China about the trade deficit that the United States has with China, then I think this is quite inflammatory. China, I would hope, would actually take a relatively relaxed view about it on the basis that their focus is actually moving elsewhere. China's past has been to build its industries, build its industrial base on the back of manufacturing for export. A lot of the manufacturing for export is now not done in China. It's done in places like Vietnam, Laos, and so on and so forth. So China has, in a sense, moved on. She still has a very important manufacturing component for export, but she has a deliberate policy of moving herself more towards, if you like, technology, services. She is creating a middle class in her own economy. She understands that her economy has moved on from where it started. And when it comes to, if you like, her basic industries, her manufacturing industries, her construction industries, and so on, she intends to deploy those in developing the rest of Asia. She's going to bring about an industrial revolution in many countries in Asia, which are still backward. And she's going to do that in a very short period of time. You've seen the Silk Road projects. They're going ahead. As well as that, there will be other projects. The result is the amount of investment that is going to go into the Asian continent is absolutely enormous. That is China's future. She is leading that thrust. So in a sense, she could probably move away from a confrontation with the Americans when it comes to trade. And I just hope that she takes that attitude and we don't have the sort of brinkmanship where, things erupt over the Spratly Islands and all this sort of stuff, or Taiwan. So I'm hopeful on that front, but I really just don't see Donald Trump understanding the source of trade deficits.
When you wrote an article about Trump's trade policies, you wrote that Trump's protectionist trade policies could lead to a repeat of the Great Depression. Can you explain why you think this?
Yes. He is reiterating much of the sentiment that we had in the Smoot-Hawley tariffs way back at the time of the Depression and slightly before the 1930s Depression. The idea that you can turn around and introduce tariffs against individual countries on individual products and all the rest of it. I mean, one of the things it does is it hurts your other industries. Under Smoot-Hawley, when it came to importing things like foreign steel was nice and cheap. It was cheaper, perhaps, than could be produced in America. Now, your upstream businesses, people who use steel to manufacture, like your car manufacturers, for example, Ford, Chrysler, and all the rest of them, they benefited from cheap foreign imports. What you're doing actually is you're creating unemployment in those industries by making them buy more expensive and less efficiently produced product from local manufacturers. And that is the way Trump is going. I see so many echoes in this that it does really rather worry me. And I just hope that he smartens up and realizes the danger of pursuing the route which he is talking about and just turns it into election rhetoric rather than reality.
Now, moving to the inflation that you see in 2017, how bad do you see the inflation getting? Do you see maybe a return to like 1980s style inflation or even worse? What do you see?
I think it's more like 1970s style inflation. We're talking about price inflation here, of course. And price inflation is something which can only be tackled by raising interest rates to a level where demand is removed, if you like, from the economy, so that people switch their preference for money away from buying goods and services into holding money. And high interest rates are required to do that. The problem the Fed has is if it raises interest rates, on my calculations, over 2.5%, it risks creating a financial crisis in exactly the same way as when they raised interest rates in 2006 to 2007 to around about the 6+ % level. And that crisis, I think, will turn out to be less than the crisis we face if the Fed raises interest rates to, say, 2.5% to 3%. That is the problem that faces the Fed. It also faces all the other central banks. Because of the accumulation of debt over the decades, their room for maneuver on the interest rate front is extremely limited. And the consequences of bringing about a change, if you like, in that preference for money over goods are really getting too great to contemplate as a deliberate act of policy.
I'd like to move back to the precious metal markets. Did you want to discuss the recent changes in the Islamic gold market? Because I know gold money now is Sharia compliant.
Yes, I'd love to. The interesting thing is that gold has always been money as far as the Muslim world is concerned. Therefore, one would have thought it was actually quite easy to get gold Sharia compliant. You would think it is automatically Sharia compliant. The problem is that gold is one of 6 ribawi items which really have a very special place in the Islamic world. And how you marry, if you like, financial technology with this traditional view of gold, that then becomes really quite a problem. And we've spent a long time working with the scholars towards producing a solution to this. We have now finally got a solution, and the fatwa was issued about 3 weeks ago, which allows us to market our platforms, gold money platforms, to the whole of the Muslim world. Now, the reason this is important is we're talking about a market of 1.7 billion people. And it's also quite a rapidly growing market in the sense of, the Islamic banking system is growing more rapidly than banks as a whole. You have people in the Islamic world are becoming wealthier at a more rapid rate than many other people in the world, certainly a lot more rapid than we are in the West. The challenges in this is that traditionally the Muslim world have held on to physical gold and used it, if you like, as their medium for capital projects. So typically, if you wanted to, buy another store or something like that, then you would go to a pawn shop, a gold pawn shop, and you would deposit your gold in return for local currency, which you would then spend on buying your capital asset. And once you have got the income flowing back from your capital asset, you can then redeem your gold. There's a huge network of these pawn shops. We call them pawn shops. They are pawn shops. They're a lot more efficient than pawn shops in the West, it seems to me. And this way, the typical Islamic or resident of an Islamic country avoids the problems of depreciating currency. I mean, we think that our currencies have depreciated quite a lot against gold. Indeed, they have. I mean, if you look at the dollar, since 1969, the year before we finally finished the Bretton Woods agreement, measured in gold, the dollar's lost something like 97% of its value. And but if you look at other currencies like the Indonesian rupiah, for example, that's lost 99.996% of its value. In other words, there is not a lot of monetary value left in the rupiah over that period of time. And so anyone who tries to save in the local currency through conventional means basically gets, it just loses it through the loss of purchasing power of the currency. So gold really is very central to the Islamic world. And I think that this is something where we can help the Islamic world develop more rapidly this to me is very good, because the problem with the Islamic world very often is we think of it as being backward. Culturally, it is not backward. It is culturally actually very strong. But the problem is that it just hasn't got the ability to grow itself into a more modern civilization, if you like. And gold, I think, by using financial technology with gold, I think that we can do that. We can do a lot. We can make our contribution towards it, which, of course, also is an activity which tends to lead to greater peace around the world. And that's something which, obviously, we've all got an enormous interest in.
All right. Well, Alasdair MacLeod, thank you so much for joining us today. Before we let you go, did you want to share with the viewers where they can find you and any last thoughts you had?
Yep. Goldmoney.com. And if you click on wealth, you'll find under wealth, there's all the research. I write an insight article every week, and I also write a market report on gold and silver. Also, the insight article comes out on Thursday, and the gold and silver market report comes out on Friday, and I just urge your listeners to read it, and I hope they enjoy it.
Once again, Alasdair MacLeod, thank you so much for your time.
That was my pleasure.